A wonderful morning. It is September 5th, 2025, and we have the non-farm payrolls right around the corner, actually in about 3 minutes, if we're lucky. Why do I say that? Because about 15 minutes ago, there was a report that the BLS is having issues with their data retrieval tools. So essentially, the BLS is having technical difficulties. You even got to hear from Lutnick, and they were saying the data will get better once they fire everybody and a lot of other things. So we were already getting ready for this. I hope you watch the watch list. I hope you are ready and understand what can actually change the narrative today, why it's important, both from revisions down to Powell. But yeah, I don't know if this is going to be delayed or not. So we got about 2 minutes. And the number, everybody's still talking to 75,000. Nothing crazy has came out yet. Literally just had Lutnick talking. But yeah, other than that, man, get ready and I just give it a minute or two and we're going to see whether or not this comes out in time. So if it doesn't, that might make today a little more challenging. Or remember, at other times, you know, sometimes when data is supposed to come out and then it doesn't, you still get to watch an algo reaction. So I'd be on the lookout for that. But literally in about 1 minute, my friends, we will be getting that data. And 75,000, I think one of the lowest estimates is Goldman around 65,000. And people are thinking this is actually going to be the run rate for pretty much until next year, or like middle of next year. People think the jobs market is slowing down. That is what a lot of the Fed people have said. That's why today is important. But then it's also important for how it affects Powell and the rates. Remember, that's just in about a week now, and the SEP. But then we got to see what happens with any revisions, politics, or whatever else we might think. But other than that, 1 minute, my friends. 1 minute. I do think below 50, the weaker it gets, they're just going to drive more rate cuts. But like I said yesterday, unless it's a negative print, my narrative pretty much stays the same. A lot of what I've been telling you and sharing you, I would be excited, but I don't think I'd be like, oh my gosh, something has changed. And then again, if it's too strong, just watch out for the bonds to go up, or excuse me, go down. If TLT gets clapped off of that, then we will see. What do I think about Lulu? I think you woke up very early to not watch the watch list, and it's no rules Friday, so I'm not going to ban anybody, but that's on the next video. So you get to be my only ban today. Thank you for volunteering. You were pumping it even before I got here, brother. So yeah, I like Lulu, but not as much as you do. But yeah, we'll see. All right, we're off. 22,000. Wow. All right, very low. Unemployment actually went up 4.3 instead of 4.2. And then I think they revised it. Whoa, government was negative. All right, we finally have a negative print. I don't really like that. The overall print is green, so I don't think I got something. I got something surprising there. That's very fascinating. So long story short, you got a negative government print. I don't think this is the bad one, but it will be. Canada went negative. Canada ADP went negative 65,000. But yeah, that came in low, 25,000. That's even low enough to the point where some people might start asking what if we're gonna get more cuts or not. Yeah, no, that came in lower. So I think that's even one of the lowest. I want to say the lowest I saw was 65,000 or 35,000. But yeah, you came in 22,000. Unemployment rate went up. Average hourly earnings was the same. Actually, average hourly earnings year over year went down. So at least there's no sign of a wage price spiral. But again, employment went lower. Let me see the other I think there's another revision there. They changed it. 22,000. Yeah, again, unfortunately, it's not negative. So the government side of it went negative, which I think is fascinating. That's like a little hint, but other than that, it's still within the range, as weird as that may sound. What the fuck? September 5th? Yeah, that's today. Okay, I'm going to go to the revisions. The was revised down by 27,000. Oh my God, what? Oh, dude. Yeah, they revised June by 27,000 to negative. Uh-oh, hot dog. Yeah, watch. So look, it's not going to change. Wait till it changes. Get ready. So you see this, I told you this in advance. I told you this years ago. That's why, oh, fuck. So yeah, that number is going to go negative. That June, you see how it shows 14,000? It's going to get refreshed, and that's the revision they did. It's going to be negative 6,000 or negative 13,000, and then July is going to go higher to 79,000. Wait, that's already updated. So they didn't update this one negative, but this one's already updated at 79,000, ironically enough. Ooh. Everything else, average hourly and none of the other details, but yeah, labor market is weakening, and technically via revision, now that's the second negative. First negative was government employment. That went negative just straight up, pound for pound. They fired more people, or they lost more people than not. But then they revised June positive to negative. So you have two signs of a negative jobs report. I think you're definitely guaranteeing your rate cut, but and the participation rate went up too. The average hours is right above the revision. Short-term interest rates jump. All right, I think we're gonna have to debate a little bit more. The only thing that brings you down is if you ask yourself, is that jobs number bad enough to make people freak out? So I think there is some concerning things there, but like I've said, I wanted the broad negative print. We got one little one, which I think is weird, but since it's 2 months ago, all it's gonna do is confirm the rate cut. So that's what we get right now. 3 minutes into this, the number was surprisingly low, but still within the range. There was some concerning factors, but now all it does is guarantee the rate cuts. If anything, I would say, depending on how everybody wants to digest if it's good or bad, or if they think it's worse, you might even hear people talk about more than 2 rate cuts, essentially. So yeah, but guarantee the rate cut for September. Jobs were a little lower, and then Canada got pummeled too. Their unemployment is terrible. So yeah. Hiring stalled with 22,000. All right. China has their own thing, but in general, just think, we're definitely getting a rate cut now. That's it. I mean, there was some concerning sides. You got to give it I think even the next 2 hours. Like I'm saying, you're going to watch people pick this apart. If they get really bearish off of it, it's just going to lead to more rate cuts. So you're lucky it was low but not negative, but then the other two going negative, I think that says a lot. And it does kind of confirm, what you have been hearing from these Fed people. They've been talking about labor slowing down and all of that. But then again, last September, this is exactly how we got a rate cut. But it was a 1 month prior where you had the data slip right before. And then the September meeting comes around, and then everybody says, oh my gosh, the labor market is slipping. And here we are. So look, Russell is ripping right now. Like I'm telling you, you can debate the jobs, you could debate the negative print and get all freaked out. But like we talked about yesterday, this guarantees a rate cut. Do you guys understand? That's it. So even before the rate cuts, we were all anticipating the rate cut, and the labor market was like slow, but not really. This just now, I think that guarantees you a rate cut, especially with how much Powell has talked about inflation and protecting the labor market. Again, what came up at Jackson Hole, that was the main theme of it. So, yeah, look at Russell's probably going to be the leader here today. I do think in the first hour or two, though, we might get a bigger shift or rotation, and then it'll go back to business. But other than that, actually check staples. Look at gold. Gold and silver are both up. I don't know if we're going to get rotation, but I see a lot of chips, bro. A lot of chips are just going straight vertical. Yeah, IWM. Oh, yeah, the REITs. That's a good one, too. Anything rate cut sensitive is going to move. Like I'm saying, in 2 hours, they may start debating the negative prints, or they may start talking about the other stuff, but just generally, that's it. And now there's 20,000 more jobs where it's like, if it did go negative, now we're talking 3 or 4 rate cuts. So I hope you guys are getting the idea here. Very surprising. Like I'm saying, the revisions to go negative and a couple of other things I think are actually very fascinating. I can't believe they revised it down, those little dickheads. It still hasn't went up. Yeah, 79. So yeah, wait till that trading economics chart updates. All right, but now let me go get ready for the rest of the morning. And God bless America.
At least the federal government. I have that number now. I just calculated it. 88,000 jobs lost in the federal government ex-postal service since the beginning of the year. 88,000. Okay. What other numbers are interesting to me? Manufacturing minus 12, and there's been a steady drumbeat of losses in the manufacturing sector. I think one of the warning signs here is these tariffs, which are sort of designed to help manufacturing, could be hurting manufacturing because of a rise in input prices in the manufacturing sector, as well as a potential slowdown in the economy. Goods sector overall minus 25. Private education, healthcare 46. And then one other number here, goods overall. I wanted to just check one other thing, which was the professional business services minus 17. A lot of minus signs here is all I can tell you. I did want to check health and leisure and hospitality up 28. So that's okay. The big story, I think, is this debate, and I'm fascinated with what Allison and Betsy have to say about this. You're now down to, and I'll give you this number here, a 3-month moving average of something like 23,000 average payroll growth over the last 3 months. Over that time period, you've ticked up the unemployment rate by 0.2. That 20x thousand, or let's call it 38,000 right now, could be close to the right run rate to if you include the decline of immigration, an increase in deportations, the break-even rate, the steady unemployment rate. Maybe it's 50, maybe
that's
it's 60,
what I was telling you guys earlier, where people are saying that
now. If this
pretty
is
much
the
from here on
policy
out,
you
all the
want,
jobs numbers are going to come in a lot
policy you
lower.
get. The big caveat to everything I've said here, August is a terribly noisy number.
Because?
We keep revising it. I don't know exactly why. It may be because it's a shoulder month on the education side. Got to get to the panel, but it's just a number that is often revised higher. Okay. And it's often a number that the street misses. I'll leave it there.
All right, Betsy, why don't you weigh in on some of these questions that Steve just raised, what you think it takes to be the break-even level for the employment market at this point?
Well, let's start with that August is a terrible month. It's true historically, August gets revised up, although the BLS seems to have wrapped their head around that in recent years because it's actually been revised down over the last 2 or 3 years. So I don't know how much weight to put on the revisions. My guess is the reason it's a terrible month is everybody's on vacation and then they're trying to get their kids back to school. And so employers are just late sending their payroll data in. I do think we're at a slower, steady state. I don't know. I think the problem is we don't have enough data to know. Is a good number 50? Is it 38? Is it 70? It's definitely lower because we're losing, foreign-born workers, and that is having an impact. And it's not just having an impact on losing those workers, but that is a rising input cost for a lot of companies. And so then they don't have to hire other American workers, right? The research shows that it's not all substitution, some of it's complements. The last thing I really wanted to highlight is what Steve was already saying, which is what we're seeing here is positive growth in services and negative growth in the goods producing sector. That's construction and manufacturing. These policies are not helping those get down and dirty jobs. We're still seeing the service sector driving the economy. The most worrying thing in the numbers, though, is that it was a decline. The decline in business and professional services that Steve highlighted is coming from temporary health services and HR services. So it does look like companies are thinking, we need fewer employees.
Allison, you want to weigh in on this? How are you reading these numbers in terms of what it says about the economy?
I mean, there's no doubt the labor market is weakening, but I still don't think this is a bad labor market. I mean, Steve made a good point that we can rely less on the payroll number and more on the ratios. And 4.3 unemployment, pretty steady labor force participation. This isn't bad. It does really look more like the labor market pre-COVID. So I think there's a lot of motivated reasoning from markets right now anticipating all of these big rate cuts, because with where inflation it is, and certainly where the stock market is, this is still not an economy that looks like it's sliding into recession. In fact, booms very rarely die of old age or just a slowly weakening labor market. They die of some external shock usually. And, I think this is just the least popular boom we've ever had, which we always just assumed would end horribly. So, I mean, we might get these rate cuts, mainly more for political reasons, maybe just for some sort of pressure, but this isn't, to me, a bad labor market. It's just one that's a lot less hot than it was a couple of years ago.
All right, Rick, what are you thinking about this? I know you want to jump in here.
Well, I think the points she just made are excellent, and that's really where I wanted to go. Is that if you look at pre-COVID as some sort of baseline
Rick Santelli
for
on
these
this early?
numbers and the distortions that have happened since, whether it was because of injections of funds, the jump in inflation, we all know the issues. So if you look at an unemployment rate of 4.3, that isn't so bad when you look at it historically. Hours worked, even to 3.7, which is to me the most disturbing part of the data today on the average hourly earnings on a year-over-year basis. But that's still 0.3 higher than what we were doing the first couple of months of 2020. So the way I look at it is we've now become kind of a no hire, no fire economy. We're not seeing a huge amount of job creation. But to take that and think that we're going to put the economy in reverse and hit the gas, I don't think we're going there. So I think that the path that Fed Fund futures seem to be outlining with the 3 meetings of potentially hot for the following 2. We know SEP is for sure hot, and we can know the white noise may disappear. But ultimately, I think we're getting back to some sort of normal, and the market's going to have to grapple with, can the equity prices remain at these levels? Is the air too thin? There's going to be potentially some rejiggering in the economy, but I completely disagree with the notion that the labor market is really going to be suffering. I just think it's getting back to something more sustainable.
Let me ask Sarah about that from the equities perspective on these things. Sarah, not all rate cuts are equal. If you're getting Fed rate cuts because inflation you think is tame and you've got the room and ability to go ahead and do this and be a little more accommodative, that's great news for markets. If it's because the labor market is weakening and you're trying to stop it from falling into different disarray, that's a slightly different reason for a rate cut. How do you read the potential for these rate cuts? Are they good, bad, concerning?
Well, 2 points for what would drive equity markets for the U.S. Number one, what we need to focus on is technology stocks. Tech stocks have driven about 2/3 of earnings growth. So whether tech stocks can continue to grow at this rate and AI demand remains in place is going to be important. Second, I wanted to comment on what tends to cause the end of an economic cycle. While in recent history, it's been exogenous factors like COVID and the global financial crisis, we have seen occurrences where booms do end because of old age. So seeing this labor market continue to slow and perhaps the economy and manufacturing continue to slow, I think is an issue that the Fed needs to pay attention to, because that could eventually drive us into a recession. And what the markets will focus on with the Fed and FOMC meeting is going to be not only the degree of rate cuts in September, but what is the commentary around the pace going forward. If we only get a 25 basis points cut in September, I think the market will sell on the news in terms of that. But if we can get information on the pace and series of rate cuts going forward, the markets may become more optimistic. And finally, let's not forget about the bond market and the 10-year. The slope of the yield curve has been concerning for equity markets recently. It's good to see that number start to moderate, but watching that 10-year yield in terms of, is it going to continue to moderate? That's going to be important for what equities do going forward.
I want to make a couple points, which is, first of all, Allison was talking about some of the ratios out there. Actually tick up in the participation rate, that's a good sign. The idea about temporary help, which Betsy made, I think is important. That can be a leading indicator of negativity, but also the employment to population ratio, another ratio that Fed officials are going to watch more because of the uncertainty about what the right payroll break-even rate is, also was steady. The increase in the unemployment rate looks to be, and I want to get some hate mail here because I'm sure I will, it looks like it's specifically very concentrated in African American areas, and that's been an issue, and it's especially African American women. Relative to white women, which has been very steady, up a tick, about 0.3 on the African American unemployment rate. It's something we want to watch carefully. It could be an effect of federal government layoffs. We know there's some concentration there, but also it's one of those things where sometimes it's the last in, first out situation where they benefited from a strong job market before and they were the last hired. They may be the first out. it's something to watch. It's an issue that may be worth some discussion at some point.
Allison, Betsy, very quick. Either of you have a thought on that?
Yeah, I just want to say that first, I think booms never, ever end of old age, but we've been ignoring the shock here. There is a shock that has been a rise in input prices for businesses. And the question is that enough to weaken us into recession?
I'm sorry you guys have to hear the propaganda.
And that's why you're seeing
it's mad early.
Those leading indicators.
But keep your eyes on the ball.
Rising unemployment for African American women.
It's kind of crazy.
That's a leading indicator, just like temporary help.
Bro, what happened today? It happened light, but I told you this 3 years ago. That's the crazy part. So again, that's why I'm saying keep your eye on the ball, because just the other day, even yesterday on the watch list, we talked about it. You have people saying this isn't the first, or they're like the first rate cut. It's not the first rate cut. You know, there's a lot of things, like we said, the bonds, how it's all playing out, and then just straight up, bro. I told you, I don't know if you guys remember. I was like, bro, they'll revise it negative. And that's when you know, that's what they did back in the day. So remember what we were talking about the economy slowing down or not. This is some of that information. So yeah, we gotta go. It's not about the reason. It's about the action. You see, a lot of times, and what's been going on here is people are convincing themselves out of what they see, right? It's not. That's why I'm saying keep your eye on the ball. It's not about what somebody tells you. You know, it's about taking it in and interpreting it yourself. So that's why I'm telling you, like when I look at a chart and someone tells me this is the first rate cut with an asterisk, I'm like, well, if I look at the chart, this is actually the second one. You know, these, like I told you guys in the past, if the job market is really weak, I said they'll just revise it negative in the past. And then once you have negative jobs, and like I'm saying, you could explain it, you could convince, and you could tell me why that happened, but it doesn't change what just happened. And that's where I've been at this whole time with a lot of these factors. So very fascinating. It really is. I don't, unfortunately, I hope you have patience. You know, we've been patient. That's what's got us here. But yeah, like this is one little step. This could be the start of something, or just like we saw last year, if this all gets revised away or it doesn't get any worse from here, this might just be you staring over the edge. But other than that, I'm telling you, truly, truly fascinating. Like I said, sorry you guys have to listen to the propaganda. I'm still getting ready. I'll be ready here in like 5 minutes. But yeah, it's
right before
very fascinating.
We were looking at the bond market rallying in the front end, and the
yeah,
bond
that's what
market
everyone just keeps trying to justify. Same thing with tariffs. I tell you, tariffs are deflationary.
Right?
That's just an objective reality.
You know, let's be thankful we got
deflationary.
The number. But this is a continued
people will tell you, yeah.
I think what's happening right now is the
and then
markets
explain
are
it.
Quickly moving.
And then if you
from
believe that, that's fine. But you have to look at what literally happened and what it is.
In December to possibly cut at all three meetings, right? That's what's the transition that's happening right now in the markets. And I love the conversation around the wealth effect, financial conditions. Is good news bad news, or is it good news, or is bad news good news, or is it bad news? And you know, the markets are kind of maybe, you know, the stock market's whistling past the graveyard a little bit here, thinking, oh, it's all good. The Fed will backstop this. Financial conditions are easy. The wealth effect is real and powerful and persistent. But you know, the way companies manage through a cycle, Jonathan and Lisa, right? They first reduce wage gains, and we've seen that, check that box. Then they start cutting the hours, check that box. Then they reduce new hiring, check that box. And the last thing they do is start firing people, right? And we're just kind of maybe on the precipice of that last box being checked. And companies do that to preserve margin, right? And I think you're seeing increasing evidence that companies don't have the ability to pass through these higher prices from tariffs, and they're starting to eat it in margin. So they have to, you know, use the labor line as the delta to maintain their bottom line earnings, and that's, you know, not great for the economy. So I do worry, you know, whenever you have a recession, you always look back, because we always miss it, right? Everybody's always surprised when you have a recession, and you always look back and say, wow, how come I didn't pay more heed to these, you know, yellow flags? And I think these are more yellow flags that are popping up. And So I'm just, urging some caution that maybe the stock market, valuations, which are really, heady already, maybe are topping out here.
Mike, the idea of whistling past a graveyard, it isn't just applicable to stocks, it's also applicable to your world and credit. And what we've seen, particularly in high yield bonds and how spreads have really compressed, and we have seen this rush into riskier assets. This idea that Jeff Rosenberg was talking about, is this a Fed willing to underwrite risk assets, or do you say this is a warning shot to lighten up on high yield, lighten up on credit risk, and go into duration?
Yeah, we've been doing that trade, right? Arguably, we've been early because, over the last 2 years, you should have owned as much risk assets, as much high yield as you could have. Defaults continue to be generally really low, but you are seeing continued concerns and pressure and credit deterioration among the weakest tranches of the high yield and the leveraged loan and the private credit markets, where these high rates, these high borrowing costs, especially for companies that have floating interest rates, are really starting to...
It's going to be interesting. Like I'm saying, it sucks you're having to listen to all these different people because, people are talking both ways right now. So, some are saying just it looks good, but if recession fears come back, or people are bringing up other inflation fears, economy slowing down fears. I've seen about 3 or 4 of them now. So like I'm telling you, that's what the negative print is weird. I don't think you've seen that since 2008, brother. So it's been a long time since you had a negative jobs print. And this one wasn't negative. It came in weak, but the revision. So that's what's going to determine the market. Like I'm saying, rate cut guaranteed. Now you got to ask yourself, the thing that guarantees the rate cut, how bad is it? And if everybody freaks out on that, we'll be a little bit more volatile. But if everyone can brush it off and then focus on the shiny rate cut, then you'll just keep hitting the highs. But like I'm saying, people are bringing it up. That's why I said the first couple of hours here today, I do think it's going to be pretty active. So, Chatadonia! No more propaganda. We're here, baby. How you doing? Good morning. Are you ready for today? Are you ready for Friday? What up, Farmer Jim? Hustling ain't easy. Dos Nacho, Tim Whitman, Deco, Skittle, NRG, Uri. Hustling ain't easy. Laker J, Anthony, Roger, Mike, Deco. What up, baby? Is that Cash? Dr. J's guys! Oh, good morning. Ayon, Ty, Farmer, Jove, Snail, Lucky Soldier, Mr. Walton, Ivan, Oscar, Hector, Battleborn, The Strong Term, Brian, good morning, baby. What up, Samuel? What up, Rose? What up, Mr. Edwards? How you doing, Jamar? Good morning, Dick. Alex, J. Esco, Mr. Sandman. Oh, Chatadonia. Good morning, me Nacho, Randy, Jardy, Marcy, Bang. Good morning. Oh, you guys ready? Today's going to be an interesting one. If you didn't watch the watch list yesterday, you guys don't know the surprise. We're going to change it up today. Oh, yeah, you're going to see, bro. You're going to see. So either way, I hope you're doing good. I hope you are blessed. BlackRock is calling this Goldilocks. Good for you, BlackRock. And here is Josh AI with the news. Good morning. Top overnight news, trade tariffs, Trump administration to begin USMCA renegotiation process with USTR launching public consultations process link. Trump signs EO implementing U.S.-Japan trade agreement, formally establishing 15% tariff. Bloomberg, CNBC executive order. Japan may face higher tariffs if it doesn't fund Trump's investment recommendations under a $550 billion initiative. Bloomberg, Japan commits to $7 billion of annual energy purchases from U.S. exploring Alaska. LNG offtake agreement. Reuters, Trump says chip tariffs will be imposed shortly, confirms they won't apply to companies promising to invest in U.S. Bloomberg, Reuters. South Korea assessing U.S.-Japan trade deal's impact on its autos as it awaits own auto tariff cut, Reuters. India's commerce minister downplays concerns over delay in trade talks. Bloomberg, Mexico to impose tariffs on countries it has no trade deals with, including China. Reuters, Trump administration's decision to revoke waivers for chip-making equipment exports to China introduces new complexities. Bloomberg, China tech firms still keen on NVIDIA chips despite government push to reduce reliance on foreign semiconductors. Reuters, markets trades centered on expected Fed rate cuts risk being upended from stronger than expected U.S. payrolls data. Bloomberg, amid upward pressure on global bond yields from debt concerns, tariff revenue expectations have provided a cushion for treasuries. Washington Post, Treasuries have outperformed global peers despite concerns over deficits, tariffs, and Fed independence. Bloomberg, economy, tepid U.S. job growth and rising unemployment expected today may prompt the Fed to cut interest rates. Reuters, some warn Trump's economic approval is declining, risking a vibe session as inflation concerns grow. Axios, China's export growth likely slowed in August due to weaker U.S. shipments and high comparison bases, poll shows. Reuters, Japan nominal wage growth rises to 7-month high, household spending growth weak. Bloomberg, Reuters, German factory orders slump due to big drop in transport sector. Bloomberg, Reuters, UK August retail sales beat expectations but sharp back revisions. Bloomberg, central banks, Chicago Fed President Goolsbee uncertain about rate cut at September meeting due to inflation concerns. Reuters, NY Fed's Williams says it will become appropriate to cut interest rates over time. Bloomberg, Reuters, Trump's nominee to join Fed, Stephen Miron, faces questions about dual roles at the central bank. Link FT. Poll shows ECB rate cuts are over and inflation will hold at 2%. Bloomberg, corporate, Broadcom assisting OpenAI to develop its own AI chip. CEO provides upbeat AI revenue forecast for 2026. Bloomberg FT. Lululemon lowers fiscal year outlook due to U.S. underperformance and higher tariff rates. Link, Apple's annual sales in India reached nearly $9 billion, driven by strong iPhone demand. Bloomberg, Cerence AI sues Apple for unlicensed use of its technology in iPhones and iPads. Link, Anthropic to stop selling AI services to groups majority owned by Chinese entities such as ByteDance, Tencent, and Alibaba. FT. Bidders value Starbucks China operations at up to $5 billion with core earnings projected at $500 million. Reuters, Washington, Trump hosts tech leaders at White House dinner, touts their investment plans. Bloomberg, Axios, a Trump to sign executive order renaming Department of Defense to Department of War. Politico, geopolitics, Trump ramping up pressure on EU over continued Russian oil purchases. Reuters, German Chancellor Merz expresses frustration over Europe's inability to pressure Russia to end the Ukraine war. Bloomberg, lower-level talks between U.S. and Taiwan defense officials in Alaska last week probably intended to avoid upsetting China. FT. There's more. There it is. S&P futures, they are up by 0.4. Friday morning comes after U.S. equities finished higher on Thursday, with the major indexes ending near their best levels. S&P hit new all-time highs, big tech mostly higher, while banks, assets managers, retail, apparel, builders, hotels, and cruise lines all outperformed. Treasuries rattling across the curve with 2-year down 10 basis points below 2.5. Dollar down by 0.8, gold is up by 0.9, and Bitcoin is up by 2.6. WTI is off by 1.1. Stocks still holding up despite a weaker than expected payroll report, including support from Treasury rally, while policy sensitive 2-year is the lowest since April. Weaker report puts putting more rate cuts through the year end on the table, with the market now pricing in 65 basis points of cuts through December, up 8 basis points prior to the report. Early economist Reed said weaker report may not be enough to meaningfully spark recession fears, despite June revision to a negative print. Given impact from falling immigration, relatively resilient wage growth beyond NFP, earnings takeaways largely upbeat, particularly particularly in terms of support for Broadcom and AI theme, while Lulu a big decliner, unlikely to shift views on consumer, with issues fairly company specific. Quite elsewhere, tariff headlines have focused on Japan trade agreement, start of USMCA renegotiation process, and the extent to which levies have provided a cushion for treasuries amid global concerns about deficit pressure. August employment was 22,000, weaker than 77,000 expected. Prior 2 months also revised down 21,000. June revised to 13,000, contraction, lowest since December of 2020. Yeah, that was the last time you had a negative print, was December 2020. And then I think September or August 08 or 09. Unemployment rate in line with 4.3, average hourly also in line. No Fed speak for today, though in an interview published Thursday, Hammock reiterated that she sees no case for September rate cut, arguing inflation is too high and trending in the wrong direction. Goolsbee said he is still undecided on a September cut, looking ahead for next week. Benchmark revisions of U.S. labor market out on Tuesday, following August PPI on Wednesday and CPI on Thursday. Broadcom strong fiscal Q3 quarter results guided Q4 higher, while takeaways positive on news of fourth AI customer OpenAI. Lulu under pressure on softer U.S. performance and downwardly revised guidance. CPRT fiscal Q4 light but EPS better. IoT boosted by better than expected net new ARR growth re-acceleration. GWRE takeaways positive on cloud deal activity, including large deal with Liberty Mutual. Docu beat and raise with street positive on IAM strength and execution. TTAN beat and raise with takeaways positive on strategic deal with Roto-Rooter. Path beat on APR, raised ARR guidance and highlighted stabilization. Outside of earnings, Tesla announced a new CEO package for Musk, and Bill boosted by Starboard Steak. Vol America. God bless America. Land that I love. Alrighty, there's more. We got more pre-market movers. GWRE, they're up by 16 off earnings. Broadcom 12.9 off earnings. CoreWeave, CLS, Oracle, ALab, and Sympathy. IoT 12 off earnings. BNTX 8.2 pivotal phase 3 trial meets primary endpoint. Docu up 7.9 off earnings. SQM is up by 2.8. Chinese government releases action plan for sector stabilization. ASML 2.6 UBS upgrade. Oklo 2.1 to build and operate nuclear facility in Tennessee for up to $1.6 billion. Tesla up to 2025 CEO performance award disclosed, including product milestones. CCK is up 1.9, Truist upgrade, ASTS up 1, ANET up 1, Nibis up 1, Pins up 1, Breeze up 21.8 off earnings, Titan up 11.3 off earnings, Bill 9.1, Starboard discloses 8.5% stake, MIR is up by 5.9, ZGN 4.7 off earnings, CGON up 4.4, updated data from Bond 003 cohort C, KRMN up 4.3, Raymond James initiates buy, SNDK 3.7, 10% price increase, ALB up 3.7, Chinese government releases action plan for sector stabilization, PPTA is up by 2.9, BMNR up 2.8, statement regarding media reports that NASDAQ is stepping up scrutinization on crypto treasuries. VZLA is up 2.5, 220 million project finance mandate with Macri to fund development of Panuku project. Pony up 2.3, partnership with Carwa, robo-taxis begins in Doha, Qatar. INHD is up by 11, FBIO is up by 10.2. NXTT is up by 10, DLTH 6.7, Baird upgrade, MEIP 6.6, master loan agreement with BitGo Prime to borrow digital assets. CLPT is up by 3, FDA clearance expanding compatibility of ClearPoint Prism Neuro Laser Therapy System. SWBI 2.9 off earnings, RGNX 2.9 new data phase 3 trial, Chinese ADRs up on action plan to curb competition and price wars in certain sectors, Bitcoin trading higher, trading lower, Lulu down 19 off earnings, Nike down 1 in Sympathy, FIG down 4, lockup expiration, TW down 2.7, trading volumes were down, Fast down 2.7, August net sales 6.7% year over year. CPRT down 2.6 off earnings, PSKY down 1.1, BBA initiates underperform, NVIDIA down 1, reaction to OpenAI and Broadcom, PHR down 10, earnings to acquire Access One for $160 million in cash, AGX is down 5.9 off earnings, KNX down 3.2, UBS downgrade, ABM down 2.7 off earnings, SFD down 1.8, upsize 19 million common stock offering, NX down 23 off earnings, Curve down 17 off earnings, and DNA down 4.5, common stock agreement, and TOI down 3, insider sale. Wow, Habibi. Wow, we're so early. Not bad. Not bad. So, Chadadonia, I hope you're feeling good. That's it. That's all we got. And I do think the first hour, this is what happened last time with the non-farms. You might get a very big reaction in the first hour, and it's just not going to be indicative of whatever's happening. So, yeah, like, you're going up, like I'm telling you, you should just be aware. Half the people like it, half the people are going to talk recession. That's it. Half the people are going to bring up recession fears. The other half is going to bring up how many more rate cuts and how good that is. So, yeah, we're going to get a little bit there. Other than that, you should have got all the headlines. I do have a couple of plays. I do want to see the rotation. I just keep an eye on dollar, gold, silver, Bitcoin. Those are the ones that we played last time. Those should be there, but we are going to find out. But it's going to be a fun one today. Again, not only the data, but now, if you have any questions, this is the time. But did you guys watch the watch list? Because if you did, you know what's going to arrive. Here, let me see if I can set it up. Okay. Oh, yeah, you did? All right. I hope you watched it. It's going to be a fun time. S&P inclusion front run? Yeah, there is. Sometimes though it's already front ran. So that's all you got to figure out. You know, this year it has been a big year of front running. That's how everybody's been doing that left and right. So you're either going to be the front run, or like you'll get the front run, or you will be the front run. That's the hard part of all of it. So we'll see. Being consistent and helping you, bro, I'm honored. I'm very honored, especially if you use it, brother. I'd love to see it, man, because like I'm saying, even today, you know, the new guys, I can't wait to help them out, and I hope that they do good this cycle. But some of you, dude, what happened today, I brought up several years ago, and I think some of you get to see it come to life. And now, yeah, man, we're gonna have a lot of opportunity, but we also need patience. And we talked about it yesterday with the bonds and how all of that's playing out. So make the most of it, baby. Make the most of it. Other than that, I had one more thing to tell you, but I blanked. And yeah, I think we're going to be good to go. So if you have any questions, let me know. We will have a couple of plays. CRM for the long term. If you want like a growth name, I mean, we talked about it about a month ago. I think it's a lower price. It's about the same price. But this is one where it has a lot of premium. It's a growth name. You're definitely paying a major premium to where it was, but it's either CRM or Apple if you want to buy a name that is up a lot. So I don't think you're getting value. I don't think you're underpaying. CRM works in a portfolio. Like, it works depending on what you have. That's what I'm saying. Or I would probably take Apple. So if you were the type to go for CRM, you should have considered Apple at the same. And Apple's already up 30% now. So that's what I said last time. Last time on the watch list when we brought them up, because I didn't want you guys to only be buying names that were in the gutter. And, you know, we want to focus on quality. And like I'm saying, the gutter names give you the value. They give you the cheap prices. But if you already built out your portfolio, there was some names that were down 20, 30% this year. CRM was one of them. Apple was another. These are names you could have started stacking on if you really wanted to. Like I'm saying, it's depending on what you have or don't have. These would be great choices, but you got to have your cash balance and your awareness of what it is. So CRM's near the same price that we brought it up, but like I'm saying, I would have much rather had Apple, and now Apple's the one that went up. Pepsi was the one that got away this year, but if you got it, you got a solid ass one, bro. Pepsi at 120, 130-ish was just fire. So again, they just hit like 160, came down a little bit. If Pepsi ever comes down, I think that's good, because Pepsi's still like down on the year, believe it or not. Remember, they just had the little Elliott thing and then came down. Yeah, Lulu. Again, though, I mean, I was telling you guys about Lulu for a really long time. So, and every time people would ask me, I'd bring up Nike. And I told you, fundamentally, they're the same when you look at like valuation. It's just Nike's bigger. Nike had other things going on. I chose Nike. And we bought Nike when Nike was already down. So it kind of makes sense with like a CRM, but you got to think about it. I was buying Nike when it was down. What was everybody saying? Why don't you buy Lulu? Lulu better. Why did they think Lulu was better? Just because the stock was going up, nothing else. But fundamentally, they were very similar. Obviously, they have different markets, but very, very similar. So this is now where we could shop for Lulu. It's now hitting a 4 or 5 year low. Their momentum is a little sour with everything going on. So like I always said, it's just, if Nike was cheaper, I'm going to take Nike, and that's what I've been doing. I don't know if I will add Lulu. I really don't. But like I'm saying, now it's way better. Now I could at least tell you that look at this. Again, some of you, when we were buying Nike this year at a really deep discount, you guys are the cheapest you were buying Lulu was $250. So again, we were buying Nike even you hit that 53 point, people were buying Lulu, they doubled up, and now they're down half. And then like I'm saying, in the beginning of the year, a lot of people, they did not like that I like Nike. They would tell me how trash it is and why Lulu was better. But like I'm saying, this is why we don't want to buy names that are too up. I'm not against these names. I just don't like high prices. Now, all the people who are going to talk shit, they're going to disappear. And now we could have a real serious conversation at 25% of the high. So, woo! But yeah, I think below 160 or 130, that's the next level on Lulu. But I don't know if I'd add it to the long term, but that is a new price. Like I'm saying, if you didn't get Nike, if you didn't have any clothing, if you don't have any of those exposure, this is one of the lowest prices you're going to get now in that space for a temporary time. I still think it could go down, but there you go now. So now you could shop for Lulu if you haven't made a purchase of that nature. That I think would do good for you. But if you already have retail, you already have clothes, everything else, it's probably not going to be there for you. Why? Because like you might just let the dust settle and wait till we get more better names to pick up on. But again, everything I'm telling you, it really does depend on your portfolio. It depends on what your balance is, how much growth you have, how many dividends. Some people during the last year or two, they either wound up with a lot of tech or they wound up with a lot of consumer names or even healthcare, because not too long ago, healthcare was the biggest value in the world. I like UPS a lot, but the dividend scares me. I'm not scared of the dividend. I just view it as another 10% catalyst. So pretty much what's going to happen is either UPS bottoms out like around here, or they're going to have a bad quarter, cut their dividend, then the dividend announcement's going to make it flush like another 10%, and then it'll come back up. The problem is that they might do it higher. That's what happened with Whirlpool. You guys remember? So Whirlpool was struggling, shot up, went down, bad earnings. They cut the dividend, but even the dividend cut brought it back down not too much. But you see what I'm saying? That's what I'm expecting on UPS. I don't know if it'll lead to another price or higher, but I'm expecting bad news from the dividend. And if they don't cut the dividend, that's only upside. So I like UPS a lot. I just can't view the dividend as stable. That's the only problem, because they're literally redlining in terms of their payout. I think they're paying out 99% of net profit to dividends. So other than that, though, we had a nice little talk on the long term. I want dividends, but all the good dividend names are kind of premium, and then there's good growth, but I want quality I-Diamond. That's what we're doing. We're still got to rebuild up the cash, and we'll be good to go with it. But yeah, I still like a lot of these names, and I hope you guys see the timing. I'm so grateful, man, because I really think that this year, by not making as many moves, I know some of you may not have liked me and my attitude and everything else, but I think we really learned patience this year, because the year's not over, but I think some of you guys got to really see time, and you stood on it. That's what I'm saying, bro. We weren't reactionary this year. We really had a plan. We executed, and dude, it was slow. It was chill. You don't need to do something all the time. But look at what happened with all of these prices. Look at how many things that, we went 50% a couple of times on different plays. How many plays would move around down 50%? Even damn fucking NVO, for crying out loud. Even like I'm showing you, the dynamic, Lulu, how even Humana, UNH, and some of the healthcare, you guys are watching this play out, but it's like quarter after quarter, and some of the same stocks, you're watching them go up 100%, go down 50, and there's a lot of that. So I hope you guys are seeing how you don't have to force it, and you know, if you're really genuinely patient and willing to play time, you could get whatever you want. That's what I'm being serious. Now, Lulu, we could get it if you want it. That's all. People like to assume that, like, no, don't do this. I feel the same way about Bitcoin. You know, everybody asks me about Bitcoin at the high, and I'm just like, nah, man, I'm good. So now it's not like I don't like these things. I think we could talk about them now. I think it's good for humanity and society when we start talking about good quality at really low prices. You see what I'm saying? I don't want to expose you to things that are not good, or that are good but the wrong time or high price, because then, dude, think about it. You know, Nike versus Lulu, that we're talking 50% difference. So that's what you got to watch out for. I think Lulu's quality, they're definitely going through something, but I don't think Lulu's the same quality as Nike. That's why I bought Nike. So Lulu's kind of new. I mean, I remember when Lululemon first came out. So, but again, they did good, and they did a lot of other things, but I never liked it at these high prices. I never understood why. But then when we looked at the fundamentals of Lulu, that's what I kept explaining, because the damn PE, the cash flow, everything, the EPS and forward books, our forward guide on earnings, everything, it was all similar to Nike. They had very similar ratios. So even though the stock had a major premium, when you just cut up the growth and the numbers and balance sheet, they looked very similar. That's why I was like, you know, I don't like the premium, but I can't deny it was pretty objective that Lulu offered that same value. But then again, Nike started going lower, and then Nike had a lot more value, and then I believe more quality and staying power. So, and now Lulu's just even cheaper. So now Lulu is the value one out of the whole space, which is great considering it's not the worst quality. But, you know, if Lulu struggles, if Lulu goes through, let me put it this way, if Lulu goes through what Nike went through, that'd be terrible. So I think Nike's a great company. They still got Nike'd. Nike still got Nike'd. And that's what I'm saying. Imagine Lululemon. I could see it happening. Look at how finicky everybody is. You don't remember how everybody went from Nike to they're like, who buys Nike? I could definitely see if it ever turns sour for a little bit. You might have a year or two of everybody's like, who buys Lulu? Well, I buy Hoka Lulu. Lulu Hoka. I'm like, what the fuck is that? You don't know what that is? Okay. All right. White House advisor has said U.S. jobs expected will revise up. Well, Chad, we're going to need time to move on over for No Rules Friday. So if you didn't watch the watch list, the next video, we are not going to have any rules on the Chad today. But before I get into that, I want to honor those who have upheld the rules, not only in the Chad, but the whole country and world. And what I am talking about is the veterans of the United States of America. So we do this every day, man. I'll give a huge shout out. It means a lot to me. And I really want to thank the veterans. And I'm so glad, man. I had another veteran email me, bro, and he got a house. And I love it, bro. I don't even care if we don't want any commission. I don't care if you buy it anywhere in the world. But I do believe in this. I believe it's your turn to own the land. I do. That's what I said, and I told you, bro. I reminded you of this at the beginning of the week. And, you know, I'm so grateful for you veterans. You guys have no idea. You guys have already shown the discipline. You have the bridge. That's the bridge I keep talking about. The bridge of discipline. You have rejected civilian life and not really chose to. And you did it for a higher purpose. And you didn't have the same opportunities or, what do I call it? Privilege. That's the word. The same privilege to live like a civilian, man. And y'all did so good. And you held it down, whether or not you agreed or anything. And that's why I'm saying there's all of these programs. And when it's all said and done, It's now your guys' turn to own the land. You have fought for it. You have given back so much, and I think you guys should be able to benefit. And thankfully, they do give you that. And at the bare minimum, I just want to say thank you. And God bless every single one of you. Shout out to your families. And I hope every single person listening help me with this. Why wouldn't we shout out the vets every day? Why, my young guy, you realize if all of the young 25-year-olds, y'all realize you could have a revolution, you guys would be just like the 70s. If y'all just said, you know what, let's get free housing for the vets. So young guys, like I want you to notice something. Like I said, the people who have fought and defended this nation in so many ways, it is now your turn to own the land. It's your turn to own the good quality stocks as well. And vice versa, man, the young guys. Bro, if you've never served, it's your turn to make some noise, bro. It's your turn to you get what I'm saying? So come on, bro. And the young guys, just don't ever forget, if all of you guys come together with one voice in youth and everything, it's one of the most powerful things. So don't ever let them play you, dog. But at bare minimum, veterans, the families, for real, God bless you and thank you for everything. I look forward to the land and everything else you guys are going to acquire, because y'all deserve it if anybody does. So God bless and thank you. And big shout out to anybody else out there giving back to their local communities. All the doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men, anybody making their community run, baby. God bless you and thank you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the judge! Oh, it's game time, baby. Horn up. Woo! Chad Adonia. Are you serious? Friday. Ah! All right, I think that's it. We got a couple more minutes. 7 minutes. 7 minutes. And now I'll tell you. It's not a trick, you guys, but we are doing No Rule Friday. And nobody saw this coming. You guys don't know what goes through my head. And I want you to see what No Rules looks like. And I want you to have training. I said I'm going to train you at the beginning of this week. Did I not? I want to see how you do in the environment. So be wise. I mean, it's still you. And we'll see. I mean, don't break any laws. Don't be dumb. Again, you are the one who rides with the consequences of what you do with this life. So either rise or rot, my friends. So get ready. But now, I think it might be time. Are you ready? Oh. Where is it? Nonfarm payrolls. So you guys don't get it, huh? Do you know what else I'm going to do? I'll show you. Well, we'll just get there. So let me see. Let me make sure it takes you there. But God bless America. And thank you to the veterans. I'm still going to talk about Jesus. Because, like, if you guys don't have rules, I don't have rules, right? That's the thing. I think, yeah, I pulled the Uno reverse. But that's what I'm saying. Because they're like, are you going to post plays? I'm like, why would I do anything? There's no rules. Why are you asking me to do something? But then I'm like, wait a minute. I don't have rules either, if that's the case. So if you might get clapped really hard today. If I hope not. I pray I don't. But yeah, either way, we'll have a good time. Is it going to take you there? It is going to take you there. Beautiful. Beautiful. I just want you to know you're my favorite gold. Yeah, I want you to notice the pumping. And I want you to notice which ones of your brothers are so quick to do it. It'll be fun. It'll be a great time. So good luck. I love you all, Chad. The Lord is with you. Be safe. And let's have a great Friday, man. I can't believe it's already Friday. So God bless America. Thank you, veterans. And